Hey guys, welcome back to the channel. So, we've talked about what green investing is and green marketing and, why it's important for businesses to get into such practices, right? We haven't really talked about, some really good examples of, some of the mutual funds and specific things you can invest in, right? So that's what I want to talk to now, right? Let's talk about some of the best mutual funds that we can invest in, right? More specifically, the top mutual funds for impact investing, right? Because, millennials have led the way in investing in companies that make an effort to protect the environment and society, right? And this is known as impact investing, right? And this approach, it's spread beyond the millennial generation to baby boomers and even, older investors, right? So, impact investing, it's not exactly a new concept, right? But the trend has become so popular that there's a lot of mutual funds that are specializing in principle based investing, right? Now, this is often measured by attention to ESG, right, which is environmental, social, and governance criteria, right? Now, the idea, right, the thought behind this is to find investments that help people and the planet and that have a reasonable wage spread between the executives and employees. Now, I want to go over about five mutual funds that specialize in impact investing, right, based on their commitment to ESG screening, right, and their ability to produce positive year to date returns. Most of these returns are, from the middle of last year. So, some of them might have, changed, right? But one of the first ones I want to talk about, right, is PARWX, Parnassus Endeavor Investor, right? Now, the focus of this fund is on companies that have good work environments for employees. Now, the purpose of this focus is to support employees' well being and find companies that are superior competitors because of better employee retention. Now, Parnassus Endeavor Investor, it tends to look for companies it believes are undervalued and seeks to realize capital appreciation by investing in these companies. Now, you know, they avoid firms that are involved in, alcohol, gambling, tobacco, or, the vice industries, right? As well as fossil fuel companies. Now, Parnassus uses advanced techniques for ESG screening to establish its, universe of companies to choose from. Right, then it narrows its selection down to about 30 or 40 companies with strong fundamentals, right? And the fund has an average yield of 14% over a 5 year period, right? The year to date, right, the return is 26, a little over 26%. And then, of course, the expense ratio for the mutual fund is 0.94%. It's not bad. So, the second one I want to talk about, TSBRX, right? Now, this fund, right, it seeks income and capital appreciation at the same time. Approximately 80% of the fund's assets are in bonds of companies that meet ESG standards. As a note, you know, the fund invests in municipal bonds and U.S. government bonds in addition to corporate bonds, right? So it might buy mortgage-backed securities. Now, it has a target of 10% of its assets in socially and environmentally positive companies. It may invest in affordable housing, community development, sustainable energy, or natural resources. The other 90% of the portfolio may not pass, the ESG test. So this fund is for those who can accept some focus on impact investing while seeking returns from more traditional companies. The year-to-date return on this one, unfortunately, is in the red. It's negative 1.44. The expense ratio is really nice. It's only 0.64%, right? So the third one is going to be a Vanguard fund, VFTNX, right? Now, this fund eliminates alcohol and tobacco companies, right? As well as nuclear power companies and firms that sell to the military. Now, stock screeners demand workplace diversity with a minimum of one woman on the board of directors and no human rights violations. Out of some 400 stocks, the top three holdings are Apple, Microsoft, and Alphabet. Right? And overall, the holdings have a strong representation of healthcare and technology companies. The fund has beaten the S&P 500 by nearly 1% per year on average. Now, the year to date return for this fund is 13.75% with a very attractive expense ratio of 0.12%. All right, let's go to move us on to our fourth one, WSEFX. Now, this is the, Walden Equity Fund, right? Walden, they're willing to invest in any size company, but they tend to have large corporations in its, portfolio. Now, money managers screen companies according to ESG guidelines, right? But that said, the company does own McDonald's and, ConocoPhillips, as well as Nike, right? Three companies that present problems for some impact investors. The fund will not invest in weapons, nuclear plants, or alcohol or tobacco companies. Returns have beaten the S&P 500 consistently for 5 years. It keeps at least 80% of its assets in equity securities and focuses on large cap companies. Now, the year to date return for this company is 14.05%, right? And the expense ratio is one of the highest, it's 1%. Of course, that's going to lead us to our fifth and last one, DSEEFX. Now, this fund has the highest expense ratio on the list, right? It invests in mid cap and large cap companies and may invest in companies outside of the United States. The fund also invests in futures and options. Domini has established its own social and environmental criteria for measuring companies. In addition to ESG screening, the fund looks for companies that are involved in their communities, right? Support employee well-being and show concern for ecosystems. Now, the fund has created its index of companies from which to choose and has successfully kept up with the returns of S&P 500. The year-to-date return for this company or for this mutual fund is 10.3%, and of course, the highest expense ratio on the list, 1.09%. So, what's the nitty-gritty? What's the bottom line? What's the gist? Well, mutual funds they're moving quickly, creating these products for impact investors. But, as you can tell, some of the funds on the list, right? You got to be careful, right? You got to carefully weigh what each one considers to be socially responsible investing. Some of the funds put a small percentage of assets into impact investing, while others dedicate a complete portfolio of responsible companies, right? So remember, make sure before you invest in anything, you're going to do your due diligence, do your research, and try to understand or come to a conclusion of what socially responsible investing or impact investing is for you, right? And then make your decision after looking into all these, mutual funds or companies, what have you, right? So if you guys liked the video, I'd appreciate it. Subscribe to the channel, give it a thumbs up, and until I see you guys in the next video, y'all be safe.